The information provided by Trading Forex Price Action to you does not constitute personal financial advice. The information provided is of a general nature only and does not take into account your individual objectives, financial situation, or needs. It should not be used, relied upon, or treated as a substitute for specific professional advice.
Midweek Analysis.
Hey guys, this is a midweek analysis for September 29th of 2021. Okay, we'll start off with the dollar-yen pair. This is a monthly chart. We'll start off with an overview. So ultimately, I'm still expecting price to reach this 101 pivot low right here. But before that, we were talking about the pullback to 104, then to 109, and then down to 101. So in the long term, I'm still short biased right back down to this pivot low right here. However, on the weekly chart, although there was more short strength than long strength, since price ranged for the last couple of months in this area and created a target for that weekly short trade in this area, and thus price pulled all the way back to that weekly short trade stop loss level, which was right here. In the short term, I am neutral biased. Okay, let's talk midweek price. Okay, this is a weekly chart. Let me run you by the setup I've been looking at for the past couple of months. So the last long trade, that form was right here. The stop loss at this pivot low right here. And so I took a long entry right up to this 109 levels right here, where I took out the entire position due to the possibility that a monthly trend line that runs right through this area was a target for this weekly long trade. However, the following days in this area right here, there was still a lot of long momentum left on the lower time frames. And so price went up another leg right here and fell right back down to these levels. And then moreover on the daily chart in this area, there was a strong daily long trade that formed with a stop loss at this pivot low right here. And so I took another long entry. However, I took out 90% of the position roughly in these areas due to the possibility that in fact, this last weekly long trade did hit its target at this monthly trend line level right here. However, soon after on the daily chart in these areas, there were consecutive weak daily short trades that formed. Now, when there's consecutive weak short trade against a strong long trade, that's a common setup that shows short-term long strength. And so I left 10% of that long position I took in this area all the way up to this level right here, where another strong monthly trend line exists. And so I took out another 5%. And then moreover on these two candles, there was a strong weekly short trade that formed. So at this point, I took out the remaining 5% of that long position. And then roughly a month later, there was a weak long trade that formed. So at this point, the weekly bias was short, or in other words, price was likely to reach this pivot low right here before reaching this pivot high. And thus, as price pulled back in this area right here, I was enticed to take a short entry. However, because it was the month of August, when trading with liquidity is low, I did not take this short entry. And then for the following 2 months, price pretty much just ranged about. And then moreover, this month in this area right here, there was a possibility that 2 new monthly trend lines existed in these levels due to the fact that price ranged about for the past couple of months and possibly becoming a target for this last weekly short trade. The decision that I made was that these 2 monthly new trend lines did not provide enough long strength to be a target for this last weekly short trade. So as price pulled back to these levels right here, if you recall, I took a short entry at this 110.65 levels right here, with a stop loss at this pivot high right here and its main target right here. Now, as you can see, yesterday price did stop out that stop loss level at this point right here. So that tells me that these 2 monthly trend lines did in fact provide enough long strength to be a target for this last weekly short trade. However, although I misanalyzed the bias for this weekly setup, I was able to abort this short trade roughly at this 110.95 level right here and minimize my loss to 30 pips. Now let me go ahead and show you why I was able to abort this short entry and minimize my losses. Let's go over to the 1 minute chart. Okay, so on this 1 minute chart, I took that short entry roughly at this 110.65 levels right here. Now, as price pulled back in this area right here, I was still okay with holding that short position. However, in this area right here, there was a legitimate double top that formed. Now, legitimate double tops show short-term short strength. However, in this case, as you can see, before the height target was reached, which was at this area right here, price pulled right back to stop out the stop loss level at this pivot high right here. So when 1 minute price did not hit the height target level right here, before that reached the stop loss level right here, at this point, that told me that my bias analysis was incorrect. And in fact, the bias was actually long on that weekly chart. For the 2 monthly trend lines I mentioned earlier were actually enough to provide enough long strength for it to be a target for the last weekly short trade. Okay, so since I was able to abort at this 110.95 levels, my loss was roughly 30 pips. So this abort decision actually saved me 70 pips worth of losses. Okay, so one way to know if your higher time frames bias analysis is correct or not is to look on the 1 minute chart for these price patterns and see if they pull through. So in other words, since I was under the understanding that their weekly bias was short, if this double top right here actually went its height target, which is roughly at these levels right here, and then pulled back to the stop loss level right here, well, in that case, I would not have aborted this short entry. For the price action of these lower time frame price patterns are not disrupted from higher time frames biases, which will be long in this case. Alright, and these price patterns that failed, which showed strong long strength, happened 2 more times on this 1 minute chart. So let me just go ahead and show you those. Let me just zoom out here. Okay, and if you don't understand what I'm talking about in terms of legitimate and fake price patterns, please watch my price action trading course, and that should clear things up for you. Alright, so again, I took that short entry at 110.65 right here, and that legitimate double top formed right here. However, price did not reach its height target at this level and pulled right back to stop out the stop loss level on the second peak's pivot high right here. So at that point, I aborted that short entry right here. Now, moreover, right after that, there was another legitimate HNS that formed right here. However, again, this legitimate HNS did not reach its height target roughly at these levels and came back to stop out the stop loss level on that right shoulder right here. So again, this is showing higher time frame long strength on both these failures of these legitimate price patterns. Okay, and moreover, the next day, there was another legitimate HNS that formed right here. However, again, it did not hit its height target roughly at this level right here, and price pulled right back to stop out the stop loss level of that legitimate HNS right here. Okay, so if you're in this short trade and thus assuming that the weekly bias was short, since the stop loss on that weekly chart was at this 111.65 levels way up here, there were actually 3 opportunities to abort this short entry before it hit its stop loss. So if you overlook this double top right here that failed and did not hit its target, this second HNS right here also showed signs of higher time frame long strength. And then moreover, if you missed that one, this final HNS right here that again didn't hit its height target was another opportunity to abort this short entry. And even if you aborted on this last opportunity, if the stop loss was at 111.65, you still would have saved about 40 pips worth of losses. Okay, so one thing to keep in mind is that if you have a bias on the higher time frames, and let's say the strength of the shorts and the strength of the longs was minimal, but you came to the conclusion that there's slightly more short strength, and thus you're a short bias, or in other words, price is likely to reach this pivot low right here before reaching this pivot high. Now, especially in times when you're not sure of the bias, these lower time frame price patterns can help you to confirm the higher time frames bias. So in this case, since I was short bias on the weekly chart, as long as this double top hit its target first and then reaches stop loss, I will not abort the short entry. And more of this HNS, as long as it hit its high target and then hit its stop loss level right here, well then again, I will not abort that short entry, for the price action on this 1 minute chart is not showing any higher time frame long strength. However, if these lower time frame price patterns do not go its target height, well, that's a sign that shows higher time frame long strength, and thus if price does not hit its height target and pulls right back to the stop loss level of that legitimate pattern, which is right here, at that point that could tell you that your analysis of the higher time frame was in fact not correct. Okay, so that's one thing to keep in mind in terms of abort strategies. Alright, and moreover, let me just show you how this bias setup formed over the last couple of months, because it was quite tricky. So let's go back to the weekly chart. Okay, so on this weekly chart, again, that last weekly short trade formed right here, then that week long trade formed here. So at this point, the bias was short, or in other words, price was likely to reach this pivot low before reaching this pivot high. So in this entire area, price was short bias. However, because 2 months passed during this entire range right here, there were 2 new monthly trend lines that formed in these areas right here, which actually provided enough long strength to be a target for this last weekly short trade. And thus the bias changed from short into long, with this main target at the last weekly short trade's pivot high stop loss level right here. Alright, so let me go ahead and show you these 2 monthly trend lines that formed in this area. Let's go over to the monthly chart. Alright, so on this monthly chart, that first new trend line was a horizontal trend line that runs right through this level right here, which was attached to this pivot right here. Now, as you can see, this trend line only became legitimate this month at this point right here, because the prior month right here made its third touch right here. And then moreover, that other trend line I was talking about is from this pivot to this pivot right here. Now again, this trend line also just became legitimate this month at this level right here, because that third touch was formed last month. And thus at this point, these 2 new monthly trend lines provided the added strength long that made this price level strong enough to be a target for that last weekly short trade. Okay, so if you're measuring biases, just always know that new targets can form, especially if your trade entry forms in price ranges about for a couple of months. Alright, so let me show you what I'm looking for in terms of biases from here forward. So let's go back to the weekly chart. Okay, so again on this weekly chart, since that last weekly short trade stop loss level was hit at this point right here, the weekly bias is neutral. And so on the weekly chart and moreover the daily chart, I'll be looking for another long trade to form, then a short trade to form. And if this long trade is stronger than this short trade, then the bias will be long, or in other words, price will now likely reach this pivot high right here before reaching this pivot low. And opposingly, if there's more short strength than long strength, then the opposite is true. So the bias will be short. So in other words, price is likely to reach this pivot low right here before reaching this pivot high. Okay, and again, since this weekly bias is neutral at this point, I will be looking for this type of bias setup on the daily chart also. Okay, alright, so that's it for the midweek analysis. I hope you guys have a great week. And thanks for watching. Okay, bye.